Welcome to Breaking Ties, a new you after divorce. This is your go-to source for practical advice and support for when the divorce process has finished. Join us each weekday for a quick chat where we'll cover a variety of topics related to post-divorce. Together, we'll explore the emotional, financial, and legal aspects of life after divorce and help you find the best path forward for you and your family. Here's your host and Certified Divorce Financial Analyst professional, Mike Fulkerson.
Hello, and welcome back to Breaking Ties, a new you after divorce. I'm your host, Mike Fulkerson, financial advisor and certified divorce financial analyst professional. And today's topic might not be the most exciting, but it's pretty important. And that is potential tax issues after the divorce. Divorce can significantly impact your tax situation. We're going to break down some key things to consider here today. First of which is alimony versus spousal support, or spousal maintenance instead of alimony. The biggest change in tax treatment came, really with the Tax Cuts and Jobs Act of 2017. Previously, spousal maintenance payments were deductible by the payer and considered income for the recipient. Now, spousal payments are no longer deductible by the payer, and the recipient doesn't have to pay taxes on them. That's a pretty significant change that, you want to keep on top of. Your filing status for the year the divorce was finalized depends on the date of the final decree is issued. If you finalized it by December 31st, you can still file jointly. Something to discuss with your ex-spouse if it's beneficial to both of you. Moving forward, you'll likely file as single or head of household if you have dependent children. Then we got dependency exemptions and child care tax credits. So the custodial parent typically claims the child as a dependent for tax purposes unless it's negotiated between parents. And there are exceptions, a special agreement can be made in the divorce decree allowing for the non-custodial parent to claim a deduction in a particular year or multiple years as well. So you really want to consult with a tax professional in order to really understand the specific rules, potential benefits, and make sure you're doing everything correctly. What about those capital gains on asset sales? Property division during the divorce is generally not considered a taxable event. However, if you sell an asset received in the settlement, later, you might be liable for capital gains taxes depending on its appreciation value. And we got the home. There's really a capital gains tax exclusion for single filers selling their primary residence if they've lived there for at least 2 years of the past 5. And this exclusion is doubled for married couples filing jointly. So understanding this particular exclusion is pretty critical if you're considering selling the family home after the divorce. And then we got legal fees. Prior to the Tax Cuts and Jobs Act, legal fees associated with obtaining say spousal maintenance could be deducted as miscellaneous itemized deductions. That's no longer the case. However, some legal fees related to dividing assets might be deductible. So there again, consult your tax advisor for the specifics and see if you're eligible for these things. So taxes might not be at the top of your mind after divorce. I know it's not on mine, but it's important to understand how your tax situation might change. I always recommend consulting with a qualified tax professional to discuss your specific circumstances and ensure you're filing correctly. Everyone's situation is different, and that includes, your taxes. I want to thank you for joining me on this episode of Breaking Ties, a new you after divorce. If you have any questions, just reach out. Happy to help. Divorce is not the end of your story. It is the start of your next great chapter. And with that, I want to tell you have a good day.